Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades. And let's get right to work. We had a lot of action today in the markets. This is DIA, which is the ETF that tracks the Dow Jones Industrial Average. And as you can see here, we're closing below this 20-period moving average. And as a result of that, the moving average is now starting to trend sideways. That's usually what you see before longer-term pivot points. And so next week, I think we're going to go down to test the bottom of this channel, but we're still in a trading channel. Keep that in mind. This upper line here, right around 392.90, is upside resistance, while this horizontal line represents support at 386.17. So just going to go a little bit lower here for next week. But again, we could just oscillate in that range for a little while. IWM is looking a lot more bearish. As you can see here, we have that big red candle on higher volume. That increase in volume is telling us the sellers are getting more motivated. And you can see down below, as I magnify this, we have a negative divergence on the stochastic and a pivot on the CCI, and we're just a hair away from a sell signal there. So I'm keeping my downside target on IWM at 197.41. Nothing has changed there. We still have this wide divergence from the 20-period moving average down there, so that's going to act as more or less what we call the rubber band effect. Looking at the Qs, this too is looking very bearish. We hit my upside target and my downside target. Remember, this was a two-parter that was contingent upon a drop in volume last week. Hard to see that horizontal line there, but that was my indication that we were looking for a drop in volume. We got it right on that day. And we have a bearish engulfing. So I think next week we could see the Qs start to break out below this fan line and below the 20-period moving average. Look at that increase in volume. So my downside target is 434.50, and if you take a look what happened with one of the Magnificent Seven, which by the way is starting to turn into Magnificent Two, this is one of the most incredible bearish engulfing candles that we've seen on Nvidia in years. Not only is it engulfing yesterday's green candle, but it's engulfing the two previous green candles. So that is super high volume to the sell side. Sell signal showing up on the stochastic. We're a hair away from crossing that sell signal on the CCI. And I think that's going to put a lot of pressure on the AI stocks and in tech in general. So I'm just throwing that out there in Nvidia. I have a longer term downside target on Nvidia. And so anyone that's long that, I would put the caution flag out for you to protect your profits and maybe even collar it. I'm not going to get too far into the strategy of collaring, but it's basically when you sell calls to generate cash and then use that cash to buy protective puts. So you're not really spending any money. You're just giving yourself a longer term downside safety net, if you will. Right? So that is Nvidia and the Qs. So looking at SPY, you can see here again, bearish engulfing. It hit my upside target. This also was a two-parter. Upside target was hit. Downside target still open. Have my downside target there, 498.67. It's going to take maybe all of next week for that to happen. But remember, once that 20-period moving average right there is violated, you got gaps open below the market. So you can see how my downside target of 498.67 is matching up very closely to this gap fill down there. So I'll keep that line in place for next week. Looking at that increase in volume again, looking at the oscillators moving lower, looking at very close to being a sell signal on the CCI. And by the way, we have a negative divergence on that CCI. See how the highs are lower as the price action has been going higher? That is something you got to watch out for. And it's something that I talk about quite often. Now, the most interesting one on the board is the VIX. And we're still caught between two gaps. There's a gap here below the market, and there's still a gap down below the market by about 7 cents. upside gap has filled. We didn't hit my upside target, at least not yet, but I think that we're going to see the VIX kind of oscillate here within this range. However, once we start breaking out over 15.5, it could be the VIX on the launch pad. So remember, the VIX for the most part is inversely related to the S&P. And while last month we had a very close to hitting that target, notice that green line up there over 18, was at around 1810. I think eventually we're going to hit that. So that is all the major markets. I threw Nvidia there and talked about the VIX. I'm going to talk a little bit about silver because I've been doing that. We have a resistance area up here on silver. Go to my X page. I put out a chart with added notes on the chart to show you what I'm looking at on SLV. The upside target was hit. We have resistance up here at 22.53, and I put a downside target on SLV at 21.5. And remember, I make my trading of SLV very public. My intentions is that I'm going to be a buyer in this area here. I sold 5% of my position here, sold another 5% of my position here. So when it comes time to buy it all back, I'll be able to buy more shares than what I had. And that's what I call parlaying the position. We've been very successful with that. Many of our followers on X have been ghosting or more or less aping those trades. And so I'm very happy with the success we've had. And that is something that I'm very proud of because our members are doing a great job. It's one of those ticker symbols that you could really have a lot of fun with if you're following the charts because this is just so technically traded. Now I'm going to talk very briefly about Bitcoin. You got this resistance here, which is all-time highs for Bitcoin, but I have a pullback point at 57,571, which if you recall from a couple of market reports ago, I used the Fibonacci retracements to come up with that very odd number. That's a Fibonacci pullback point of 57,571. So keep an eye on that. Now, if you have been following along, and many of you know this already, but I'm going to repeat it because I teach you repetition. The 7-point trading checklist is what I use in my mind, more or less, to make my price forecast. And we put all those ideas down on a simple PDF document to help our members more or less gauge the pressure between the buy side and the sell side on their own. And you could use this checklist on any stock, any index, any currency, any commodity you want. And when the signals stack up, for instance, if you see bearish signals on the candle, bearish drop in volume on the way up, wide divergences from the moving average, gaps below the market, stochastic showing sell signal on the CCI, or resistance role reversals, when you see all of those stacking up, guess what? Maybe that's going to cause you to pause a bit and think about your reasoning for buying that next stock. If all the sell signals are stacking up, at least this is giving you some indication of who's controlling the stock at that point in time. And obviously, the opposite would be true. You're not going to be selling when all of the bullish signals are showing up and the buyers are controlling the price. It's basically putting the odds in your favor so that you could make the best decision. And then after you've made the trade or placed a buy or sell order, you could then go ahead and manage risk using my 1% rule for managing risk, which is something that we teach at Sticky Trades. Just go to stickytrades.com. You can get a copy of this. If you're not a member, we're even making this available to non-members, so you have it as a tool to help you through the charts. All right, now this week, comments from Jerome Powell really has put the brakes on, I would say, the S&P's hopes for hanging on, because if you remember last year, the market was pricing in 6 rate cuts. We haven't had one of them yet, and here we are almost to the end of Q1. So the market is still hanging on to hope. I don't think that's a great strategy at all. Hope is not a strategy. It's more of an emotion if you want to classify it as such. But the markets are getting tired, and the Fed is basically still walking along with that narrative, talking about soft landings, right? And so if you look at what's happening with the Fed's recession gauge, this is now at a 40-year high. So this is screaming recession while the Fed members are still talking about soft landing, soft landing. This is at a 40-year high here, folks, and the market seems to be just ignoring all the signals. Another one to look at is the Russell 2000, and we talked a little bit about that when we looked at the analysis. I think it's going to start pulling back. But 1 out of every 3 companies in the Russell 2000 is unprofitable. This is coming from Bank of America. Think about that, folks. The markets are screaming along in this very irrational sort of way, and over 30% of the companies in the Russell 2000 are not able to show a profit. This is pretty incredible. Again, I'm just shouting from the rooftops and giving you these truth bombs so that you could manage risk. Listen, we're making money on individual trades from the long side. You could ask those matrix traders who subscribe to my shorter term directional option trades. We bought Apple yesterday, and hopefully a lot of our members took their profits today in a one-day profit that was tremendous. And on the downside, we do play stocks like Target. We've recently bought puts in Target. Go look at the chart on that and take out your trading checklist, and you tell me who's controlling the stock at these new higher levels. So you have to look at the data, put it all together, and then make your own decisions. Here's another one from CNBC. 44% of Americans say they can't pay an unexpected $1,000 expense from savings. That is pretty scary. What does that tell you? Well, basically, they don't have savings. And if they get into an emergency, they're in deep trouble. And a lot of these very same Americans are maxed out on credit cards. So they're in a very, very tough place. Remember, we want to teach our youngsters, teach your kids, your grandkids, your great-grandkids for some of you, your nieces, your nephews. We got a message from Danny. He says, my youngest 5-month-old and oldest 11-year-old always watch your videos with me. And I asked who the first names, and that's Amaris and Alina. Congratulations, Danny. I don't know who is the youngest out of the two, but I'm sure your 11-year-old is going to absolutely understand everything I'm saying here, and your 5-month-old will have to wait a little while before she gets that message. And then also from Mark Toon. Mark Toon says, I like how you suggested teaching my daughters the ticker symbols for the stocks as we go around town. Yeah, I call that the ticker tape game. And, you look at DLTR, Dollar Tree, 5, Walmart. These are fun games to play with the kids. And I will absolutely be putting a book out one day for kids and teaching them the basics without getting too far into the concepts of money, just teaching them the signals. And remember, we did a shout out for 5-year-old Jackson. Interestingly enough, I got an audio recording from Jackson thanking me for the shout out. I just want to play it for you here because it's just so cute.
Thanks for the shout out, Mr. Monty.
And you are very, very welcome, Jackson. And I'm looking forward to having you come on this program one day when you get a little bit older and teach people about the bullish and bearish engulfing candles. When I talk about the ticker tape game, a lot of parents know this for sure. Punch buggy, oh man, we were getting tired of that one, driving on those long trips with my 2 sons when they were younger, and I Spy, and my wife would be very busy with the 20 questions. The game 20 questions is actually a strategy to keep questions coming from the back seat. Questions like, are we there yet? Yeah, right? How many parents, raise your hand, how many parents have gone through that? This is a fun way. It's called the ticker tape game, and you learn the tickers and you're teaching the kids. So when you pass by a Lowe's sign, you ask the kids, hey, what's the ticker for Lowe's? Costco, Home Depot, you name it, McDonald's, Wendy's, Walmart. This is so much fun, and there are many more, obviously. But you keep that going, and believe it or not, it works. Just ask my son, who's now working for us here at Sticky Trades. He's in his late 20s, and he knows all the ticker symbols from the games we used to play back in the day in the car on those long trips. Well, folks, thank you so much for joining us. Please like, share, comment, and we need your help with that because we're quickly approaching 10,000 subscribers. Remember, we just started this channel in July of last year. We would love it to get to 10,000. Once we hit 10,000, subscribers really start to come on pretty quickly. And remember, the more people who learn about charts, the more accurate the charts become. That's for you right there, Jackson. Go talk to your dad and tell him what that candle looks like and what it's called. All right, folks, you have a great weekend. We'll talk to you next time. Bye-bye.